All right, guys, welcome back to the channel, and a special hello to the bots that have decided to join us. But for the real folk, here we are today with 3 red days in a row for BTC. Looks like it is finally time that Bitcoin has its pullback. Now, is this going to be the major significant pullback, or is it just another bump in the road to higher prices? There are 2 different charts that we're looking at today, or 2 different classes. One is Bitcoin, the other are altcoins. You can see there is a lot of red going on the side here of my chart. And again, just going back to some of the videos that we've looked at just in the last few days, we've talked about how altcoins are basically waste of time. Let's call it a waste of time at this stage until certain signs of strength start to show up on their charts. And at the moment, this has continued on. So we've got a lot to get through today with Bitcoin and its timing into a local top, what happens next, or at least what the statistics and the probabilities are for what happens next, along with Donald Trump reversing and then going forward again with tariffs, which have also affected the stock market with our grinding phase right now that we've been obviously covering now for a few weeks. So don't go anywhere, hit the like, subscribe to the channel. It's your home of macro cycle analysis. Lots to get through today. Oh, along with our 18-year cycle, things are still going up. So that could be a little bit of a precursor for BTC. Okay, so let's start with the biggest news, just one news headline here. The taco trade. Trump always chickens out. I think the Trumpers are going to not like that one, but Trump in particular really did not like that. You saw a video of him with the media asking the question. He said it was a disgraceful, disgusting comment, as he typically does, but it's really just a good way of looking at the market. Chickening out with the tariffs, basically putting tariffs on, market had dumped. When he takes the tariffs off or pauses them, market goes up. So at the end of the day, it doesn't matter about all this name calling, which Trump is amazing at. He's really good at coming up with names. The market is the winner at the end of the day. And no matter what you do, the market is always going to win. Doesn't matter who the hell you are. Even if you're the president, it does not matter. The market is going to do what the market does. So the news headline was a few hours ago, US court temporarily reinstates Trump's tariffs because they were actually blocked just a few hours before that. So Trump had the tariffs, then they were blocked, and then the court said, no, we can put some of those back in. I think all this is going to do is just obviously upset the man, and he'd probably take to Twitter and start to post some BS that, again, brings volatility to the market, which probably shows up with our timing cycles here. We've got this volatility coming up, or at least this is what the cycle has suggested for, well, obviously the entire year. We're looking at 2025, and it's suggesting that we've got a bit of a choppy road ahead through May and June until we get into the July period. And this could be what's building up towards that choppy period. As for BTC, the statistics were showing that it was unlikely that we were going to see any more than 7 weeks in a row to the upside. There has been the single occasion of an 8-week run in the same trend to the upside. This is for Bitcoin now. And for, well, at least the last few days, we've now seen, we're into our 4th red day, but of course this day has not closed yet. We do have 1, 2, 3 red days. We have 3 days with lower highs, lower lows, but it's not from the all-time high. So that was a good thing. This day right here on the 26th of May was the savior for this signal on this video here. This cycle top signal just failed. So we don't have a 3-bar down rule from the top. I repeat it again, we do not have a 3-bar rule down from the top. This day blocked it, but there are 3 red days here, which has turned the swing down. So this is our 1-day 3-bar swing. Last time we had 3 days down, which turned the swing down, was back early May. So we now have a second one. Now the only difference with this here is that the run to the upside did not extend the previous run to the upside. So the moves to the upside have in fact slowed, or the price range that they've been able to gain has actually slowed. So that's the first thing that we're getting here. There is a slowing of buying activity. Yes, you're going to see green days and red days. That's just how the markets work. But when you look at the overall picture and take into account how much the market is interested in buying rather than selling, well, there is a clear sign that this is less than this move to the upside. And the importance of that is that things may be slowing for this period. And I've just given you reasons why that might be the case. And of course, we'll also look at the S&P 500, which has been playing out over the last 2 to 3 weeks with this grind trading range above a solid level here at 5,500 points. So that's the short term on BTC with what's happening at the moment. The support levels to the downside remain where they were, as we talked about yesterday, below these lows at around 102. Of course, you've got your psychological level at 100, and then we take it back to this consolidation in the low to mid 90s. I would be getting concerned with the overall bull market for BTC if we were to see a break below this particular. This zone is at around 83 up to about $87,000. So if the price somehow made it below that and consolidated under that level, that would be an extremely weak sign for the bull market. But any moves to the levels that I've just mentioned, the price ranges I've just mentioned, would just be basically just trying to balance the strength and the weakness. Up here strong, down here weak, below here, well, maybe start to pack your bags and have a plan to get the hell out of the market. If you don't have that already, here's a great segue. TIA Premium is on sale today. Links in the video description. Just subscribe and that email will go out to you with the coupon code in about 7 hours time. Now, the other thing that's playing out is USDT dominance has also found support here. Obviously, Bitcoin down, ETH down after attempting to break higher. I'll get to that in just a moment. Alts are down at the moment. That ranges from single digits to, well, I guess high single digits. But the main thing here is it's still USDT dominance has not found a way to break past this all-time support line. That's the only worrying thing at the moment, at least in my opinion, because unless this breaks down, then we're basically stuck with money just flowing between alts and stables and BTC, and you're really not seeing any strong trends emerging in anything except Bitcoin, which of course we've seen that strong trend emerge in BTC, up 50% in 45 days. So it would be natural that you would expect a pullback. Now I'll get to another pullback as I get to the crypto data in just a moment, looking at the market sentiment. But just to finish up with USDT dominance, on the daily chart, you can see it's back above that line, 1 day close, and now here we are trading again, still underneath the 4.75, so basically rocking a hard place as it has been since the 8th of May, so basically 3 weeks ago. We want to see a breakdown of these lows and these new lows here at 4.4%. That would then give it a bit more of a run on for more money to flow out into some of these shit coins over here and over here and over here. Basically all the shit coins that are in a stronger position. But unless this happens, unless USDT dominance breaks down, then we're pretty much going to see more of the money flow out of everything and then back in to stable coins. So look at the traditional markets. Of course, this is all going to affect Bitcoin and altcoins as well. Fear and greed is sitting at greed for the traditional market. This is S&P 500. It's been sitting in greed for a little while now after having some extreme fear for a long time, a very, very long time. You were there from February through to April. So basically 2 months, more or less, sitting in extreme fear. So it's natural that we'd probably see some sort of pullback. As I showed just earlier, we're looking to June to be a bit of a choppy market. Yes, there's going to be some moves higher, which might lead the market to think we're away and it's clean and we're ready to go again, and then a pullback later in the month, or at least that's what our cycle analysis is looking at. And at the moment, we're basically on track for that. We've seen a high on the 20th, we saw the pullback, and then just yesterday, just in the last 24 hours, we saw a push higher, so a fake out to the upside, and then a lower close forming a red bar, but also an outside bar, higher highs, lower lows, but then also a lower close. So basically testing those highs, fake out. I look at this being basically part of the choppy range now moving forward for the next couple of weeks. The NASDAQ's in a similar position, also another fake out bar, except it's at a slightly stronger position. So you still got the grind here, but like you can see with the red line in the background, which is our 5-year cycle, it's got more of an upwards trajectory, whereas the S&P 500 was a bit more flat through this area and then starts to take off. So tech is potentially in a slightly stronger position here overall. As for the Dow Jones, which has a few more in the the transport sector and things like that, it's also like the S&P. It's basically grinding sideways here. Still in a strong position because it's above the 50% level of the decline. So there's your range there, high to low, and then the 50% through the middle. So it's still in a strong position, and it looks like it just needs some more time to digest things that are probably going to go on here with Trump and his taco trades and all the things that go on in the markets, all the BS. So let's continue on with the bonds and the interest rates, because from the taco trade, we've also seen the 10-year yields have a pullback here, and the 30-year yields have a pullback, and the bonds have a day up. So you'll probably recall from our analysis on the bonds and the yields that there was a lot of what I consider retail channels and retail accounts, whether it's on X or YouTube or wherever you get your sources from. They were talking about the bonds right here, 21st and 22nd of May, and discussing how, well, because the bonds are going up, or the yields are going up, this is going to break the market. They weren't necessarily talking about it back here, talking about it here, but they talked about it right here. And I said, you can go back to these videos, just it must have been through these days here, that pretty much just looking at this, when you can find out which channels are the retail channels, more so the retail channels, then you'll get an idea of where maybe some local tops are forming. And to me, that local top has now formed. It's right there, 22nd and 29th. We just had another day down, breaking the low, putting in a lower high, lower low, confirmed. There it is. Retail hits the nail on the head again with a local top on 10-year yields, the 30-year yields, and the bonds have found their way out of this low, which was a pretty significant low. That's basically, you had to go back to January. So that's 5 months, or a 5-month low. And then to the next low, you have to go back to October 23. So basically 18 months ago was the last time we saw prices that low. Retail talked about it, and now we've seen a bit of a bounce higher with higher highs and higher lows, at least on the daily chart. Why the hell do the bonds matter and the yields matter? Essentially, in a nice nutshell, my idea here is that if we continue to see this over the long term, if we see it over the long term start to head down, yes, in the short term it can go up, in the long term go down, this might be a major sign that the 18-year cycle is coming to a peak, and it could be a significant reason why we end up in this major peak and collapse into this major recession that we've got timed out to happen after 2026. So that's the idea why we're still watching these sorts of things here, along with obviously covering Bitcoin and altcoins. I don't think these markets, in terms of Bitcoin and altcoins, are going to go up if you see a major significant break in the US economy, and that's where I'm looking at it when it comes to the timing. The US dollar also has a significant role to play in the economy. Obviously, we're seeing a breakdown here, all part of the 18-year cycle, second half of the 18-year cycle, second half, 18-year cycle. US dollar typically goes down over that period, and it continues to play ball, continuing to go down. However, this pause has happened pretty much every single time for the last 11 years. Once it gets to a significant break and meets a 3-year low point, then it goes on a bit of a pause and can go on a bit of an up mission as well. This time, however, because we're at the end of the cycle, I'm still watching for this to at least pause here, which it is doing right now, and then start its breakdown again. Whether it comes up to test some of the 50% and then breaks down, that's another question. But overall, I think this has still got further to go to the downside after breaking that 101 point level. Now, while we're still on US and looking at stocks here in particular, MicroStrategy, this has also continued down. I'll go through this in greater detail once we get a bit more data, but if you want the great detail, go back to yesterday's video right here, history repeating. The time frames with MicroStrategy leading into a top is basically, well and truly on track compared with the previous cycle. It's almost an exact replica of last cycle so far. 90 odd days to go. Well, that was that previous top, and I'm looking at it here, roughly about 80 to 90 days to go until we get to a peak. Look, I know it sounds crazy. I'm just running with it because it's happened before. Yes, it's only one data point. The pattern has been very, very similar to what happened in the last cycle. I'm keeping it, the way I'm looking at it is I'm keeping it on the radar, but I'm not using it to say, once we get to this point, I have to sell out of all my Bitcoin. I just think it is so uncanny how it can happen time and time again, yet Michael Saylor and all that's going on in the Bitcoin space really believes that MicroStrategy has got a lot further to go this cycle. And at the moment, the chart is just not saying it. It's not impossible, but it's just not there yet. So if you can hold this $330 level, that could be a really good sign that it could at least attempt 440 and break out and give us a new high. But if we start to see a bit of a failing underneath those levels again, underneath 390, underneath 430, 440, that would be your signal to say, well, it's probably going to end up like last cycle. Okay, so the 18-year cycle now, let's jump to the biggest of them all, is still heading up. US home prices, as you like to call them over there in the US, we call it real estate, we call it house prices or land prices, which is actually more accurate because it's the land that is going up in value, not the house that sits on it, but the land. The latest reading here from March is higher again. New all-time high for the Case-Shiller Home Price Index. That is a part of the winner's curse phase. Property prices still going up. We've seen some fresh all-time highs in the case of Washington, 600K, just eclipsing 12 months ago in June. Boston here in blue getting very close to a new all-time high. Most of these markets now have eclipsed their post-pandemic highs. There's Seattle, Boston, Washington, the national average. That's the post-pandemic high there, of 22. So obviously you can see in the yellow line here, it's above it. The blue line, it's above it. The orange line getting very close to it, which is Seattle. The black line is Los Angeles. It is above it. And the light blue, Philadelphia, Chicago. Look, it's all running into new all-time highs. If not, it's very close to those all-time highs. And in terms of the national average, 438, you're $4,000 off a new all-time high, which was set exactly 12 months ago. So take it for what you will. That is the 18-year cycle playing out right in front of your face. Some people believe it, some don't, but the data doesn't lie. New all-time highs. Next up is the crypto data, and we are seeing the wrecked liquidation positions increasing. We're at $750 million. Obviously, most of the longs getting slaughtered right now with the price coming down, and that is increasing above the average right now. So generally, that's what we want to see. We want to see some of these longs, or we want to see basically the leverage get liquidated so the market can reset before it can move higher. Probably most of it due to the hyper liquid trader here, James Wynn, who basically had, I don't know, like 87 million in 70 days, and then it's almost down to zero. He had a position of $500 million, obviously with the 40x leverage. So it wasn't all his 500 million, but he had an $87 million position, 40x leverage, parts of it. And now it's down to an unrealized loss of $2 million. So basically 80 down to zero in 5 days. Trying to long this top after such a long move to the upside. Maybe he's missing a plan. I'll leave that idea up to you. But essentially, this liquidation is probably due a lot to this trader here and then others who are trying to copy at the same time. But the nice thing is we're seeing the leverage positions get wiped out, or anything leverage, and obviously most of the shorts not getting wiped at this point because the market's going down. And once we can remove that leverage, that makes it a lot easier for, well, more natural positions to come about, and we get a consolidation of the market. So ideally, we're doing something similar to last time where we've gotten some significant highs for the time period itself, and then we continue to base out, takes a month or so, and then work our way higher. possibly what's going on at the moment, especially considering it's been about 10 days already. Could be another week or 2 weeks, similar to the analysis that we've just looked at before with this. The search volume has also basically stayed relatively the same. Crypto's similar, 22, 21, and Bitcoin's at 51, 49, 50. So it's not really telling us too much at this stage, apart from those who have been searching for it remain here, and they aren't really dropping off. We've got a few more eyeballs coming and going, but mostly for BTC at this point. And as for the market sentiment, that obviously has dropped off a lot since yesterday. You had 74, last week extreme greed, and now we're down to 60. Obvious reason is we've seen another few more days down and a lower close at this point. Now, in terms of the timing, remember we've watched these two areas for corrections in relatively strong trends. So relatively strong trends. If you like the sound of that, hit the like, subscribe to the channel. You made it this far and you haven't already, why not? Okay, so here is the nuggets that we're watching. Lows to highs, and then the corrections here. That one's 15 days. And then we also had the lows to the highs for basically a run out of extreme, if not just on the border of extreme fear, into a greed or an extreme greed, just like we just saw here. 23rd, basically had 1 day in extreme greed, and then it's pulled away from that point. 15-day correction and a 7-day correction. So we're already past the 7-day point now. Now we look towards the 2-week mark. That'll take us out to early June. So 5th of June right there. That's 14 days. Give or take, of course. It's not like an exact thing that you have to meet it on the day, but give or take. Watch, if this continues on here, watch for another low to come in about a week or so's time. We're going to crypto total market cap. It's also continued to fail at the 50% extension. This one includes Bitcoin and Ethereum and stablecoins in a stronger position than total 3. So total 3 continues to fail here, putting in lower lows, lower highs, failing at the 50% of the down range and 50% of the extension as well. So let's get rid of that. It's moved a little lower, and this range, like what happened with Bitcoin, is smaller, shorter than this range right here, which is telling you that there is weakness forming, and that can be a short term, and for some, a few weeks might not be short. It could be an absolute eternity for a lot of the shitcoin holders, but that is what is happening in the market. As I pointed out in this video, so you can go back and watch that if you wish. We're waiting for the signs to tell us, or waiting for the market to tell us that it wants to come back into some strength. That can happen in 24 hours. If you see this thing close higher, there you go. That's the first sign, break above the highs. Second sign, consolidation above the 50%, above 900 billion. Another strong sign. But if it keeps doing this, well, then you've got shorter price ranges to the upside. You've got closes underneath the 50%, which is a significant rejection away from strength, leading into a weak position. And then if we started to see closes underneath these swing tops and break this swing low at $780 billion, that would be another weak sign that it's going to take, one, either more time to consolidate before a higher price, or two, a downtrend, because that's in a weaker position. Your next 50% is at 700. So on to altcoins from that point. And on the daily chart, we're looking at ETH. It tested the 2,700 level, just fell short of the 2,800 and has now closed underneath that. So at this point, you've got a fake out, an attempted break, and then it failed with another day down at this stage. The volume did increase on that fake out, so that's a little bit of a telltale sign that it might not want to continue on with this trend for the time being. If ETH can hold above roughly around $2,400, and then this low here at 23. So have a nice little box there, 23 to 24. If it can hold, good signs that it could attempt to crack it again. Otherwise, you start to see closes under this level. That's a weak sign. Probably going to come back and test this bar right here. That price range is between $1,800 and $2,200. Now onto the altcoins. Let's have a look at them against their USD values first. Solana versus USD. As we pointed out now for weeks, it failed at the 75 and the 50% now twice. And the volume also picked up as it failed on that test, and lower highs formed, and it continues to break down. So like we talked about back here, when people are getting excited, you probably need to be cautious still. And it's not saying that there is not an alt season. It's just it's probably not time yet. And that might go opposite to what I title it. I'm probably calling this video "It's Time," but nonetheless, let's have a look at SUI. That's also on the way down, lower highs, lower lows, still above 50%. So although it's cooling off, it's time to cool off. There you go. I worked it in. It's probably not time yet that it wants to pump higher. And of course, we're also seeing that with BTC as well, down to 105. And then XRP, it had a nice day down. So basically breaking those lows cleanly, closing below them, but still just above $2.08, which was the swing low out of the April low. So that's an important low right there to hold. If XRP can do that, then you're getting these slightly higher lows that are forming. That's if, okay? You start to see the breakdown of these zones. That's $2.03 to $2.08. That's going to be a weaker sign that it's going to come back and go underneath $2. And you can see it on the BTC charts as well. It had a day down, tested it up 2 days ago, then came back down dead on the 50% level, low to high. There's the 50%. So it tested it just yesterday, closed low again. So that's weak. SUI also testing the 50% of the major range, also weak, closing down. And then Solana against BTC also underneath that swing low. So Sol BTC also weak. I pointed this out. It came up to test 50 and then got rejected. And you can see it a little cleaner on the weekly chart as well. Move down, move up, and it's just pulled away here. So it really needs to hold these lows. The lows I'm looking at are around 15,000 Satoshis. Just looking at the number on the side here, that is going to be pretty much the short-term level for Solana BTC to hold. So it can hopefully attempt some more strength once or if the market comes back for strength. 6 weeks to the upside. Can we make it 7 or even 8? Similar to only 2 other times this cycle. That's the big question leading into June. Big update video coming for you next week. Like, subscribe, and the sale is on today for TIA Premium, which you can also get the indicator suite bundled in as well. This thing is absolutely phenomenal. I'll see you guys back here at the next video. Take care and have a great weekend. Cheers.